Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1263A, and today's date is April 25th, 2017, and the title of the episode is The Central Bankers' Tricks Are Now Being Used Against Them to Bring the Economy Down. Let's get into the economic collapse financial news. Now, today we see the market, well, it has surged up quite a bit. Gold brought down once again. And we can see that these bubbles that we've been watching for a very long time, they are inflating very, very quickly right now. And we can see that things are not going well in the economy. We've been looking at this for quite a while, and we can see that things are continually breaking down. Now, consumer confidence, this is coming from the Conference Board. Remember, this is the Conference Board which receives grants from the government, and they like to tell the story the way the government wants to tell the story, that everything is fine. And what we're seeing is that the Consumer Confidence Index, well, it has dropped in April, and the notable drop is in expectations in business conditions because they are weakening right now. Now, when we look at the Gallup consumer confidence, we can see that Gallup consumer confidence is much, much lower than the Conference Board consumer confidence, and this has been going on for quite a while. But we can see right now that the Conference Board, well, that consumer confidence, it is dropping right now. And we see that there are more and more retail stores where they're laying off individuals. They're saying, oh, it's because of online, everyone's shopping online. Remember, each one of these businesses, they have an online presence, and they should be doing fantastically if everything is going to online, because if everyone is switching from brick and mortar, their entire business, not just brick and mortar, but their online, their brick and mortar should be doing incredible because they're purchasing a lot of items on their online service. But we're not seeing this. Actually, the overall for each one of these companies is doing very, very poorly. This is why we see bankruptcies today. And J. Crew right now is saying that they're going to be cutting about 150 jobs because sales are in retreat and they're starting to trim costs. And we're seeing this with many retail stores right now. Now, we see Case-Shiller is out there, and they are saying that from the top 20 cities that the price of homes, they have risen by 5.9%, and this is the highest increase since July of 2014. And of course, as we know, they use these 20 cities to pump up the bubble. And they use it to make everyone believe that the housing market is doing fine. Actually, if you look at the graph and you can see the home prices, you see back in 2012 going into 2013, we hit a peak of home prices. And since that point into the mid of, say, 2014 or so, housing prices dropped dramatically. And since the mid of 2014 up until the present day, housing prices really haven't gone anywhere. Actually, it is like it's flatline right now. And they're also telling us that new home sales, they have jumped and they have tied for the highest since, 2008. Well, we know what happened in 2008. Right before the entire system fell apart, they were telling us how great housing was, that home sales were selling like crazy. They were building like crazy. But again, when you look at the graph and you go back to 2009, new home sales, it's not even close to where it was back in 2006, 2007. It's not even halfway to that point. So housing sales have gone nowhere. Why couldn't they bring it to the point where we were once before? Because this is being driven by hedge funds, investment companies, foreign investors. This is not being driven by the American people. And this is why they could never get it to where it was. All they could do is get certain cities to a certain level to convince the population that the housing market is back. But it isn't. Actually, if you look at these cities, there are so many homes for sale right now, and many of the houses, they are lowering the prices and they're on the market longer and longer and longer. And things are really not going well in the real estate market. Now, people who are living in these 20 cities, they're going to continually push the bubble to the extreme until it pops. And those individuals that are in these 20 cities, well, they're going to come tumbling down, and most likely they're going to be the hardest hit because those are the cities, those are the areas that have been pumped up the most. And if we go back in time to California and that area, Florida, Miami region, those areas were hit very, very hard. But again, the same areas that were hit very, very hard, they went into those areas and they started pumping it up again. And we can see there's a lot of speculators. The big investment companies now are selling off because the insiders know we've hit the top. The top has passed. We need to sell them to the retail investor, speculators, mom and pop flip-floppers, and they are the ones who are holding these homes, which is going to be a disaster as we move forward. Now, Trump, he is going to order a corporate tax rate cut of about 15%. And Trump told staff he wants a massive tax cut to sell to the American people. And he said it was less important to him if the plan loses revenue. Now, the proposal, which is going to face fierce pushback from the conservatives, as it is nothing more than a continuation of what Obama was already doing. So this is nothing new. He is going along with the deep state, with the central bankers, and they're doing the exact same thing. Now, keep that in mind. They're doing the same exact thing. It sounds terrible, but we're going to find out what is really going on here. Now, Trump's massive tax cut will be funded by debt, and as a result will be at best temporary, as it will be in breach of the revenue constraints in the reconciliation process. At worst, it will never happen, as it will now require Democrat to vote. But it's funny because this is what Obama was pushing for all along. Now, Trump said he's going to announce a 20% tariff on Canadian softwood lumber imports. The tariff will be applied retroactively and imposed on Canadian exports to the U.S. of about $5 billion a year. And he said we tried to negotiate a settlement, but were unable, adding that the previous administration was also trying to negotiate a settlement, but they never could resolve the dispute. So Trump said, okay, let's add a tariff. Now, it sounds awful, it sounds terrible, and it is in certain respects, but let's continue to see what else is going on here. Now, we know the debt ceiling argument is coming up, and we can see that the Democrats, well, they're going to make a really big deal about this, which it doesn't matter. Republicans can make a big deal. Democrats can make a big deal. It makes no difference at this point in time. Does it really matter if the debt ceiling is raised or not? No, but they are going to raise it. Trump wants it raised. He wants more spending. And then people are saying, oh, wait a minute. He wants more spending. That's going to be more debt. Why would he want to do this? And of course, what they're doing is they're saying, well, he wants this wall built, and if he wants this wall built, he's going to want this in the budget, and we're going to have to look at this. There's going to be an argument. So basically, he came out and said, listen, we can look at this later on this year. This really doesn't have to be included. Let's just pass this and get the debt ceiling raised. Let's pass the budget. Let's get it all. But when we look at this very closely, Trump's request that Congress include a $1.4 billion to fund the beginning of his wall on the U.S.-Mexico border equals approximately 0.035% of what the federal government will spend in total this year, according to the latest estimate of fiscal year 2017. And this is coming from the Congressional Budget Office. It also equals less than the Department of Health and Human Services spends in just 12 hours, and less than the Treasury collects in taxes in 4 hours. So when we really look at this, this is meaningless. And most likely this is why he's saying that, okay, you know what, we'll look at this later. It's not even that much money. But if you notice, they're starting to make a big deal about this. And he doesn't want this to be a big deal. He wants this to go through. He wants the budget to go through. He wants the debt ceiling raised. All of this needs to be done. And it seems kind of strange, but he needs this all to be done. And I'll explain this in a little bit. We see right now there's a tidal wave of inflation that is rapidly moving through the financial system. The Fed is tightening policy by hiking rates, but the rest of the world's central banks, they are continually printing $200 billion in QE every single month. And I don't mean printing with a printing press or pushing a button. Yes, $200 billion at a time when the financial system is out of a crisis. So why are they continually creating this currency if everything is fine? Well, we know that nothing is fine here. This is at an all-time record, greater even than the global money printing that occurred at the depth of the 2008 crisis. So that tells us something. that right now where we stand is a lot worse than 2008. Now, $200 billion per month, we're talking about an annualized pace of over $2 trillion in money printing every year. Now, if you don't believe this will unleash inflation, consider that already in the U.S. inflation has exceeded the Fed's target on all 4 of its measures. This is happening at a time when the Fed is hiking rates and not printing money. So we also know that across the globe, in many of these other countries where the dollar is used on their natural resources like oil, these countries, well, the people are taking back their countries. And once they take them back fully, they're not going to be using the dollar any longer to pay for their oil, which means all these dollars in reserves, that's all going to flood back to the U.S. And all this currency that is being created right now, well, we're going to have a big disaster. But gold smells what's coming. It's inflation. And those people who realize this, they're preparing for it now. Why do you think China and Russia have been purchasing all of this? Now, Michael Pinto is out there, and he is saying Wall Street and our central bank are in for a rude awakening very soon. The idea that the U.S. economy is on stable footing and about to experience a surge in growth is ridiculous, and I completely agree with him. He says Trump no longer wants a strong dollar and an end to endless interest rate manipulations that has been robbing the middle class of its purchasing power for decades. Instead, he's become a Yellen supporting, bubble-blowing, XM bank-funding, NATO-backing, China-loving, card-carrying member of the neocons in D.C. Absolutely right. He flip-flopped on the interest rate and on the dollar, and he's doing exactly what the neocons, the deep state, and the central bank wants. But even though Trump now loves low interest rates, the Fed has probably already tightened monetary policy enough to send stocks into a bear market and the already anemic U.S. economy into recession. Housing starts, Empire State Manufacturing, industrial production have all recently disappointed estimates. Housing starts fell a very steep 6.8% to a 1.215 million annualized rate. Empire State Manufacturing dropped from 16.4 in March to just 5.2 in April. And within industrial production, the manufacturing component shrank to minus 0.4%. And the Fed right now is about to drop, he calls it the Moab on Wall Street. The economy won't accelerate unless Trump is able to push through a massive tax cut, which we know is not going to happen. Now, think about this for a second. It looks terrible. It looks like, oh my God, he's not making America great again. He's not doing what he said. Now, in the beginning, he came out and he said, listen, we're going to bring back jobs. We're going to bring back manufacturing. And he really thought that he was going to be able to bring this down very easily, very nicely, bring jobs back, and make it much better than it really was. Then he got into the White House and he started to realize, well, wait a minute, this is not going to work. And I said this from the beginning. All these jobs, all these manufacturing, this is for after. To bring the economy down, how would you do it? Can you just say, oh, I want to bring the economy down? I'm going to bring back jobs. I'm not going to bring back jobs. What do you have to do in his position to bring the system down? You need to play their game. And what do you got to do? You have to push the bubbles to the extreme so they pop. This is why he reversed his decision on interest rates and the dollar, because he already knew the central bank already made their move and they just can't go back on it because that would look ridiculous. So he waited for the right time to do this. Now he's playing along and he's pushing for these bubbles to pop. Now, don't get me wrong. This is going to be horrific. This is not going to be easy for the American person. This is going to be a complete disaster in the making, because he is using the same tricks the central bank has used for all throughout these years on them right now. And they have no way out of this. He has them in a corner, and he's getting ready to pop these bubbles, and he's pushing it. So whenever you see him doing all of this, well, this is to bring the economy down, because it's a race right now. The central bank thought, oh, we're going to bring it down. And he's like, no. I and the others, we have control. We're going to bring this down. We're going to use your method. We're going to pump these bubbles and pop them right now. Now, to restart this system, well, it's going to be a complete disaster. And he can point the finger at the central bank and saying, look what they just did. It's a very good plan to get rid of the central bank right off the bat, because they took the interest rates, they brought them up. Their central banks are creating currency like crazy all over the globe. He wanted to bring back jobs, but it was completely impossible. The debt is continually going. He's going to let Congress raise the debt ceiling, and everything is going to fall in place, and this economy is going to come down. This is the plan. And you can see this is exactly what he is doing. Now, can something go wrong? Of course it can go wrong. But we can see right now he has the central banks. The central banks are creating $200 billion per month right now to keep this system alive. The Fed is raising the interest rates so they can bring it down. And once it starts to come down, they're going to start lowering the interest rates. But he's forcing the bubbles to blow up now. He wants it to come. He wants the entire economy to come down way before the central bank, so they're kept off guard. They have a plan. He has a plan. And this is what we are watching right now. This is why he has a portrait of Andrew Jackson in the Oval Office right by his desk. Because Andrew Jackson got rid of the central bank. He's doing the same thing. He's going to get rid of the central bank. And the economy is coming down one way or another, so get prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.